Listening to the Non-Del Influencers podcast, brought to you by First Funding. Join host Matt Coles as he delivers powerful conversations to help non-delegated lenders succeed and scale in today's market.
Welcome back to the latest episode of Non-Del Influencers podcast. I am super thrilled to have a good friend. She wanted to be introduced as the queen, but we won't do that. Aleyna Groves. Aleyna Groves of Groves Capital. Thanks, Aleyna. Thanks for taking the time.
Yeah, of course. Thank you for having me. This is exciting. Like I told you, I love to talk mortgage. So this is perfect.
I could nerd out on mortgage talk pretty much every day. I do like a full column for my sales team about 3 things that are going on in the industry every week. That's like a whole everything about the mortgage business. You know, the good thing is that it does not stay constant, right? There's constant change in our business.
Yeah, exactly. I think that's something that you just have to get used to in mortgage. It's never going to be the exact same market that it was, right? If you've been in it for even 5 years, 10 years, 20 years, you've noticed, what comes up comes down. This product's hot. It's not hot 5 years from now. So you just got to be able to pivot and change. I think that's important in our industry.
Yeah. So you're actually in one of my favorite markets. You're down in the San Diego market. And I know you guys have statewide, nationwide licensing. And so you kind of got your fingers all over the place, but you're located down in San Diego. Yep. What are you noticing about the San Diego market today and how it may have shifted from, maybe even since the pandemic?
I think this is true not only for San Diego, but across the country. People just aren't willing to move. They're just not willing to move. And so the inventory is super light. There's a lot more buyers than there's a lot more sellers than there are buyers. And, I think once, hopefully we see some movement in interest rates, hopefully Jerome gets it together in September or this month, since we're in September now, and hopefully we start seeing some movement there. But definitely I'm seeing offers come in, even a little lower. Like, for example, in our neighborhood, we have a house across the street. It's, we have a friend of ours that's trying to buy it, and they're coming in super under because they're just like, they probably just want to get it off the market. It's been listed for a year. Yeah. So we're seeing that kind of, stuff happen.
Your relationship with realtors probably goes pretty deep. Are you seeing realtors talk about cancellations of purchase contracts happening quite a bit, or is that not a thing down in your marketplace?
Yeah, definitely. There's definitely cancellations that are happening. And people are, I've just noticed people are just a little discouraged. They want to sell their house. They need to sell their house to take the equity to then buy another property, and thankfully there are some lenders that have provided solutions for us as a wholesale and correspondent lender, where we can actually use those situations exactly like you're talking about, and we can actually close the deal using a really unique bridge product. So there are some lenders that are providing new loans that will help facilitate those sales to actually come to fruition. So it's a good product, not only for us as the lender, but also for the realtor partners, because now you actually give them a solution to a stale listing.
Every time we get together, I feel like you and all of Groves have kind of their pulse on the industry. You guys are really clued into what's happening in the marketplace. And so let's go back. You've been a partner with First Funding for, I think, 8 or 9 years now.
It's been a long time.
What was that? What was the motivation for you, and maybe some of the unrecognized wins that you've had since moving from that broker to banker space?
First of all, First Funding has been the most incredible partner to us. So I just want to thank you for that support over the years. You've really contributed to our growth and trajectory in the mortgage industry since we started working with you guys. And, it was a little bit, scary, that jump from wholesale to non-del, but you guys made it
especially at that time when you did it. It was 2016, and like the technology wasn't as good as it is today. Sorry, I didn't mean to interrupt, but that's crazy. Yeah.
It's, I guess maybe the biggest thing I can say, or the biggest takeaway that we've had is just, we have more control, right? We have more control as a lender. There's definitely the disclosure piece that you've got to be a little bit more sensitive on, right? And just do your due diligence on that. But I would say that the key to our growth has been partnering with First Funding and becoming a non-del lender and not just a wholesale lender. Clearly, there's some compliance and a little bit additional risk in that space. But, that really comes with anything that you're building. You're building anything bigger and greater, you're going to have to manage a little bit more risk. Absolutely worth it. And I think the non-del side is really where we found our footing and our growth.
So when it came, I always say this, right? We're on the precipice, right? Of probably, I think we're at the beginning of another cycle, right? And I've been doing this for 25 years. I know you've been doing it for a while too. Like, it feels like momentum is coming back to our side slowly, this time a little slower than it did, right? I think we all kind of expected 2025 to be a little bit more robust, but thinking back to when, loans were just shaking off the tree and all the wholesalers were getting backed up with disclosures and docs and everything like that. What did that freedom and that control process look like for you during that period?
When we transitioned from wholesale to non-del, the amount of control was tremendous, because now we had control over disclosures. We had control over rates, over rebates, over margins, right? That can really add to the overall value of your company. It can add to revenue. It can add to potential growth. So, it's a little bit of a learning curve, right? We'll be honest with that. It's a little bit of a learning curve. But the fact is that the First Funding team, you guys have always just been there to help guide us and provide us those tools. There's a lot of other things that you need to manage when you're going non-del, but you guys have those resources and you can connect us to those third parties that were able to help us mitigate some of those additional roles that we had to take on, right? So
yeah, absolutely. And you guys spend so much time building out your brand. Brand is very important to you guys. And so just that consistency of brand and timing throughout the entire process, I'm sure has been a great thing for you that we talk a lot about when we talk about broker to banker side of it.
Yep.
So,
totally.
All right. Well, I've said this quite a bit. I don't think, I look back to my conference days of 2022 to 2024. I don't think I went to any conference that didn't talk about non-QM lending.
Yep.
I have now entered the phase where every conference is going to be rightfully so focused on AI.
Pretty much.
Every mortgage panel is going to have an AI expert or whatever it could be. And listen, it's part of our DNA now.
Yep.
First Funding is trying to figure out how we can leverage it to automate the repeatable things that we have to do on a daily basis. Mm-hmm. But tell me a little bit about what you guys are doing to embrace it in your organization.
Yeah, well, thank you for asking that. I mean, like you said, AI, it's not the future, it's here and it's here to stay. And the companies that adopt it are going to go just that much further and faster when the market has its shift. And we're already feeling that momentum. And, being in the industry for such a long time, I think I'm a little over 20 years now. I've seen it from the retail banking side, from the wholesale banking side, from the non-del side. And, really the common denominator within all of these is there is so much that we do that's manual and repetitive that takes away from really what we love, which is sales, the relationships, time with our family. We don't need to be managing updates and communication and collecting docs. All that is incredibly manual. And so what I created, initially it started out as a tool for my mortgage brokers. I have, 400, 500 brokers across the nation. And the main consistent pain point that we see across the board, and it's been like that for 20 years, is always the conditions management piece. So whenever, loans are approved, it's then totally disjointed and disconnected, and no one knows what's going on. And you're sending out 30 emails to title, escrow, borrower. Hey, did you send me this document? Hey, I know this is the wrong document. And then you got to save it, and then you got to attach it. A nightmare, right? And no one knows what's going on. All the while, the lender is like, hey, what's up with my pipeline?
Yeah, so, you gotta update your PDF checklist of, okay, I got this document, right? Those days are long gone. Yeah.
Exactly. Or you put it in a Dropbox, or you save it in a folder in your email, and then maybe they sent it to a wrong email because your client has maybe an old Gmail, not your new work email. Like, literally a big time waster. All the while, you're chasing your pipeline instead of chasing deals, right? Instead of chasing relationships. So what I developed as a tool, it's an AI agent. It's an AI processing agent. And what it does is it takes away the 30 manual plus steps and milestone updates, which is yet another process that is extremely manual for us, just updating the general milestones of what's happening throughout the transaction. And it reduces all of that to just 3 clicks. So from 30 manual steps to 3 clicks. And essentially it's like I said, it's your full processing tool where we are piloting it with a few enterprise wholesale lenders, which is really exciting. Also with a few really well-known software companies that we're also piloting it with. And I'm currently working on finalizing a seed raise round for my system to go live much quicker than I could do it on my own. I have a really incredible team. We're working on our SOC 2 compliance piece as well. So there's just a lot of great development. It's moving quicker than I could have ever imagined. And it's just meant to help relieve us from those manual repetitive tasks, from conditional loan approval to CTC. All it requires is 3 pieces of information, and the system provides everyone secure portals, updates, full visibility, tagging specifically to the condition. And it just, allows you to do what you do best, right? We're, as loan officers or processors, we shouldn't be collecting conditions. Our real bread and butter is the people that we work with, those relationships that we can cultivate and manage over the years. So this really frees the time up to do that.
So I'm interested because one is, how do you avoid going down the wormhole of what's the latest AI thing that I need to do? Because obviously you said it at the beginning, it's moving so fast. What's good today may not be good in a month from now, right? I mean, sometimes. What are you doing to stay on top of it all?
I think I'm noticing a lot of AI tech come out that's specific to underwriting and that's specific to the front end or the back end. Okay. No one's really touching the middle piece, which is the part that everyone deals with. And, over the course of 20 plus years, the process has stayed the same, exactly the same. So the tool that, that I created is really speaking from a place of deep industry understanding, from living in that pain every single day, and just creating a solution that doesn't have to, be implemented into any kind of backend software. So there's no legacy software that you have to get rid of. It literally just sits as an overlay. Anyone can use it because everyone deals with the same conditional loan approval for either the lender, the processor, or the mortgage broker. You can use the tool in the same capacity.
So I would imagine that somewhere maybe watching this video is an LO or maybe even a processor who says, I don't really want to embrace AI because it's going to replace me. I think it's going to replace me. But what I'm hearing from you is that it's just adding to you so that you can go out and do more of what you have passion about. Does that sound about right?
Absolutely. I don't think AI should replace people. I think it should enhance us. It should free us from doing the activities that maybe take us away from doing the other activities that actually make us money or bring us joy. So it really isn't a tool, at least in my opinion. It's not meant to replace us. Our industry is still very sales and relationship driven, and that's something that an AI tool can't do. The human touch is so much more valuable than that. But what this does is it just takes away from you having to do the manual things that a tool can help you do now, so that I can have podcasts like this with you. I can go out to lunch with my realtor partners, and I don't have to be micromanaging the conditions coming into my pipeline for my 20 loans. Right? Yeah,
there's always something, right? I mean, I was in the industry when I heard that realtors were going to be replaced by online shopping with, realtor.com and stuff like that. At the end of the day, the person who gave me the mortgage for my house, I still talk to them. We talk to each other about financial updates, everything that goes on. So I don't think that interaction is going to end. It's just going to make it stronger and more repeatable, because I'm sure, like you, right? You probably get busy. Maybe all of a sudden you're busy for a day. That turns into 3 or 4 days. All of a sudden you haven't followed up with the client for 4 or 5 days. Yep. But if you have something supporting you behind it, you don't have to have that stress or that anxiety about it.
Exactly. It's just your pipeline condition management on autopilot, right? So spend 5 minutes to enter in 3 key pieces of information, and free up 15 hours of busy work per transaction. And then, like you said, you get to deepen those relationships with, more time to use for other things.
Well, one of the things that I know in doing this for a long time is I feel like every cycle, the expectation of time becomes shorter and shorter. When I first started in 2000, right, a 30-day escrow was plenty. Yeah. Now, great technology is. The last cycle, I felt like if we didn't close in 18 days, we were behind the clock, right? And so who knows what this next cycle is going to look like? Is 12 days or 14 days going to be like, hey, you guys close in 15 days? That's way too long. That takes way too long.
Yeah. Expectations are wild nowadays.
Right. And so think back to where we were in 2020 and 2021. And I think we all suffered a little bit of a burnout situation just because what you're talking about. We were doing so many repeatable things on so many files. This time around, I think it's going to look different. I'm really excited about that opportunity.
Yeah, I agree. I think a shorter closing time is going to be the norm, and the people and companies that adapt to the tools that are out there that help you automate a lot of those repetitive tasks or use AI to validate documents, whether it's from underwriting or the conditions piece or the closing piece, those are really the teams that are going to win, because you're going to be able to provide better customer service, better closing times. You're going to be able to then use that as a recruiting tool to bring either loan officers to send you business or recruit loan officers if you're a retail bank, because now you're offering them tools that will get them paid faster and get them better reviews. So whoever is, right?
Yeah. That's a really good point. So let's talk about it from a recruiting standpoint. You know, you've got a number of LOs underneath the Groves umbrella. Tell me what that looks like when you're showing it to them. Are you getting the warm reception that you anticipated? Being like, wow, this is really going to open me up and allow me to do more deals. Are you starting to hear that a little bit more often?
Absolutely. It's really, I knew it was, but at the same time, hearing it over and over again from the individual brokers, or even the big lenders, that the tool that we're providing them through Groves IQ is going to help them not only recruit more loan officers, recruit more borrowers, because now they can offer a tool that is valuable, that is going to really mitigate the most painful part of the process for everyone. Because even on the borrower side, the borrower's like, oh, the conditions, I got to email them back and forth, and they got to, what's this again? So if something is doing it for you, it makes the borrower experience that much easier. And it's really been a game changer for the loan officers that are joining Groves to have access to a tool that allows them to, like we keep saying, right? Do what they're a loan officer. They don't manage updates all day long, or at least they shouldn't, right?
Yeah. So, no, I mean, as a sales manager myself, I try to tell my salespeople to get their nose out of the inbox, right? Because we can be consumed by our inboxes. The thing, you know, the top email that hits my inbox is all of a sudden my most important crisis, right?
Yeah, immediately, all day long, I could be lost in the inbox. And then what I do, I didn't prospect, I didn't talk to anyone else. All I did was just manage,
it's not a good way to grow sales at all. Absolutely.
Yep.
One of the things that I am concerned about as we get into this era of AI is security, people's private information just being in different portals. What does that look like? How important was security for you when you were trying to set this up so that it still stuck strong to your morals as Groves Capital about how you're trying to protect people's data?
Absolutely. Well, you know, being a mortgage broker and lender, we're very sensitive to, you know, the compliance risk and features and encryptions of documents. You know, right. So privacy is of the utmost importance. So we obviously use that as we build out our AI tool. We currently are working on our SOC 2 certification. So that's going to really alleviate a lot of the security concerns that, you know, enterprise level clients will have, and even from an individual user level. So, you know, being that we absolutely understand what's necessary from a mortgage side, and then of course bringing that mortgage and tech security to the tool as well is very important to us.
I mean, from my seat, Aleyna, you guys are probably taking one of the biggest step forward for AI to someone I've talked to, and I'm really impressed with how you're going about it. What else is next? What's next for you guys? What are you preparing your 400 plus LOs for in the year ahead? What's top of mind for you guys?
You know, top of mind is really, again, freeing them up from doing the activities that they shouldn't be doing. I would love, in the perfect world, I would love every loan officer to have access to a tool that allows them to build those relationships. And so making the sales side and the process side easier for them, giving them tools that allow them to really focus on sales, family. Like at the end of the day, like work is one part of our life. I'm a mom too, you know, I'm a person outside of this. And so what really hits home for me is that the tools that we're providing and the problems that we're solving are just, you know, not going to alleviate the work that we're spending in the mortgage process, But more importantly for me, it's going to give a better experience to everyone around them. And it's going to take away that stress, because I know that as an originator, I can get stressed over the conditions and updating, just like you said. And so if I can take that away and take that off of your plate, I know that now I have more time to relax at my kids' soccer game or practice, or take them to ice cream after school. I don't have to rush back to my computer to send out updates to my 10 clients. Of course, they're important to me, but if I have a tool that can do it for me so that I can spend more time doing valuable things that bring me more joy, that put me in a better mood, I can show up better, not only for myself, my family, but for my clients, so it's much more than just work.
Yeah, I've known you for quite a while, and I always admire how you and Chris, you guys balance work. You guys are extremely successful at work. You guys are great parents, and you also have a great social life. I mean, it's really it's pretty admirable how you're able to do all three very successfully. It's a fantastic.
Thank you. It's a fun life. I'll tell you that. It's fun.
Yeah, it's not bad. I mean, like I said, I'll go back to what I started with. You live in the most absolute beautiful part of the world, which, is fantastic. So it's a great opportunity. All right, I'm going to get you out of here on this. When we look forward to 2026, any bold prediction for what you're expecting in 2026?
Yeah, I really feel that, 2025 is maybe going to be the start of that next wave, like we talked about. Maybe we'll start. Yeah. I'm already seeing a little bit of a momentum right now, but I feel like we're really going to feel it in maybe spring or summer of 2026. And I think the companies that are adopting the AI technology out there to help streamline their systems, to help them recruit either loan officers or borrowers in general, are really going to be able to capture more market share. As we know, loan officers in general haven't renewed their licenses as much as they have in the past, right? I think we've gone down to, I don't know how many, 40% of what was registered in 2021. So there's less people here to capture the market. So if we can all position ourselves in a way where we have the right tools in place that allow us to really make those relationships and make the process more streamlined for everyone, we're going to see another huge opportunity for us. And I think it's just the beginning in the spring of 2026.
So if I'm a loan originator and I want to learn more about the AI solutions that you're bringing to them, how do they get a hold of you?
You go to grovesiq.com and you'll click on the mortgage AI processor button, and it'll take you right through right there. You can request a demo, or you can email me directly as well.
Fantastic. All right, Aleyna, thank you so much for your time. Really do appreciate it. And we'll look forward to seeing everybody on the next Non-Del Influencers podcast.
Awesome. Thank you so much. This was so much fun. I want to do it again. I love this.
We'll do it next week. Week.
All right. Bye, Matt. See ya.
Bye.
Thanks for tuning in to the Non-Del Influencers podcast, powered by First Funding. For more resources and episodes, visit nondelinfluencers.com.